Okay, this is a tiny, short little video on something I really hate. It's about taxes. I'm not criticizing taxes, and just this issue about a net operating loss when you have an expiring the net operating loss after expires after a certain amount of time. Now, if I put net operating losses in just about all the models, and there are many countries where the net operating loss effectively doesn't really expire. It expires after 20 years or something like that, which basically means that the expiration of loss can be whatever can be ignored. But in some places it does expire, and I put these stupid whatever from the data validation things. I put these up here. I'm going to move them. So let's say we have some expiration period in 3 years. Here is the problem. I'm just going to explain the problem and then work through the Excel. The problem is that we have some negative income for taxes, then positive, then negative, then positive. Don't think it only applies to this particular problem though. Now, when you have that, if we would have a normal, if we wouldn't put any expiration of the net operating loss, in fact, I'm going to put a little flag here that and I'm going to waste your time with some little stupid whatever they're called things here. Okay, and come on. And then you got to take this stupid checkbox out, and then we're going to right click and make this attached to the true and false. Okay, this problem I addressed many years ago, and I put it into my silly little book. Now, if I right now I've got a really long formula, and I'm going to multiply it by the true or the false. Okay, Shift Control R works on here. Now I have no expiration in the losses. In that case, what happens is the oh god, the background noise. The I'm having a heart attack right now. The in that case, we can when we have our we can take all of this net operating loss over here. Now, I'll put a sum over here. Okay. Now, at the end of the day, oh God, I better make this thing a little wider. At the end of the day, now if I put this expiration of the net operating loss in, I can only get back 180. Now, why don't I put a sum of this in? That's how much I get to use of the NOL. Okay. Now, if the expiration would be 100 years, then I can use it all. So how do we model this, or how do we account for this expiration? Now, if you did a simple exploration without accounting for the fact. Oh no, oh no, I'm gonna continue making this video even though. So I'm gonna put our 3-year expiration back in here. Now, right now, here's what happens. We adjust the balance. We adjust the balance that we're allowed to take the NOL from, and this is this classic minimum and maximum function. You say, okay, whenever the earnings are positive, that's the maximum of this number or 0, then we either take this number or take how much is in the balance, not more. That's the minimum of this or this. That's our classic. If you want to learn the minimum and maximum, it's the classic use of minimum and maximum. instead of some idiotic if statement. Okay, I get emotional about that one. All right. Now, right now, that's adjusted because what happened here is in year number 2, I took 80. I already took 80 of the loss. So when I'm going to, the loss is going to expire, this is not 200, it's 200 minus the 80. And the real question is, how in the model do you get this 80 incorporated? Now let's make another little pretend thing. Let's pretend that let's make expired loss without adjustment. NOL without adjustment. Now, if this is already computed and it's a very simple number here, okay, and then I'm going to put NOL expired applied, and we'll put it. Let's put another true and a false where we use this adjustment. I'm gonna maybe put it here, so I'm just gonna put a true here. I'm gonna be a little bit lazy, copy this one and right click on this one. So again, the reason I'm doing this is not to show you silly little true and false things, but the reason is to show you what happens. So if it's true, we're going to use the adjusted NOL times the true plus this one times not the true, which maybe that wasn't the way to do it. Okay, I'm sorry about that if you don't like that. Maybe an if statement would have been a lot better here. Nothing against if statements. So if it's true, we're going to do that. If it's not true, we're just going to use this. So here's what you do. You recompute this NOL expired. And really, I'm getting into some of the technical things now because the first thing you need to do is figure out just how much NOL is expired now. If the NOL is expired here, I suppose I'm going to have to put this here, and that means that this could never be negative, so I'm going to have to put a maximum of this number or 0, which is kind of stupid. But so if we did not take account of this thing here, if it's false, then we have this. If it's true, then we get to use more because we've accounted for the fact that less NOL is expired. Let me restate that since it's a painful thing to talk about. If we account for the fact that the NOL expired goes down, this adjustment is less, and that means we still get to use 20. If we don't, then if we don't put that adjustment in, we're making our model too negative, too conservative. How do we get this 20 back in here? And what I did down here is I put a bunch of different scenarios in. And if you have earnings before tax where it's negative and then all positive, then we have an adjustment to make. We have this. If you didn't make that adjustment, then you would just a minute. Oh, you get the same answer this time. If you didn't put the NOL expired, then you get to take it all back. Okay. In another case, I put negative all the time. Now, in this case, it doesn't really matter what you do. You never get to take it. Okay? That's okay. That's a case. The negative and positive would be like some depreciation. And then maybe case 4 is the most interesting one, where you have negatives perhaps from a depreciation and then positive after that. And right now, we get to use half of the NOL. If we didn't account for this reduction, Yes. Ah, good. That changed. If we didn't account for this fact that you adjust the prior NOL, then you would be understating. I'm looking at this 400 versus the 200. You would be understating it by a lot. If you didn't take account of the NOL at all, you'd get it all back. So you can see now, again, maybe this is good that we show you the little stupid true falses, whatever. So now I've got them both true. This is the real case. So the first thing you do now, you need to get this number. Now this number, it looks like it's going to be a circular reference because it comes downstairs. But it's not, because I really use the opening balance, I hope, on most things. I'm stuttering. We'll work through it. Okay. This number comes from the bottom. And then now we just said we take the opening balance, and we put a little subtotal in our accounts, which I used to be terrified to do, and it's not that bad. The closing balance is still the subtotal plus or minus, and the opening balance is still always the closing balance from the prior period. No big deal to put a subtotal down there. Don't be afraid of this. And then there's no difference in the amount of NOL you create. You stick that into your account. And whenever the earnings before taxes are negative, then you create some NOL. That's not a big deal. And I've already talked about this one where you put it back. These are just the very classic NOL positive and negative things. No big deal here at all. At all. Now, then this one shouldn't be that big a deal. I've gone through it again and again and again, but I guess I'll do it one more time. When you use the offset function right here, you use the offset function, this one right here, that just says go backwards 3 years. Go backwards. The 3 should have been here, of course, somewhere. Go and put a minus in the offset. Go upstairs to the row you want, this row, and go backwards. How many periods you want to go backwards? It should be periods, not years, and all that. And I guess, if you get really technical and getting horrible nightmarish, you can do this in maybe the taxes are computed annually for some reason. I don't know if they are. Not in places I pay taxes, unfortunately. You pay them quarterly. Whatever. If you go backwards 3 years and you say, okay, well, I'm gonna, whatever I took in 3 years earlier, I'm gonna take this. So you go up, stay on the same row, go backwards. But when you do that, if this is earlier than the year, you're going to get a reference because you're going to go backwards all across the sheet. So you have to put a little if statement here and check this number and make sure it's greater than that. And then I multiplied it by the true false. So that's our NOL if we don't have any expiration. Now that's easy. That's easy for me to explain. Then I'm struggling. I struggle like crazy on what to even call this next account. Oh, shit. I'm going to make these things really small. I don't know why. Okay. And then, so I say, okay, we got this. But then we have to say, I called it accumulated balance of NOL previously used. This is where you're seeing how much of this NOL that you would have expired, you've already used. Now what I do here is I'm just going to go through this. I make an opening balance equal to closing balance. I kind of randomly did it and just basically, oh, there's a door opening. And then the next thing you add to that balance how much you've actually you would have used how much you've used in the period. Okay. And then you say, oh, well, okay, so that's okay. So we're just kind of saying, okay, how much have we already used? We haven't used anything. We finally use this stuff here. Just comes right here. And then this is the confusing one. You say, okay, well, let's see how much of the account that this, just a minute. I've got to pause. I've got to pause. Now, in this period, here's the deal. We would have lost 200 from expiration of the NOL. That's fine. And in this period, but we hadn't taken any NOL prior to that, so there's no adjustment necessary. The problem occurs in this period, right here. The problem occurs, this is kind of a nice little example even. The problem occurs in this period. Now, we would have wanted to take an NOL, we would have wanted to go backwards 3 years and take that NOL and say it expires. But the problem here is that we have an opening balance in the account because we've used some of the NOL in the last period. This is why it's so confusing. I can't even explain the damn thing. Okay, and then now you say, well, okay, now I put a minimum function. Perhaps there's a better way to do this, but I put a minimum function in, and I really need to explain what this whole stupid little account is. We put a minimum function in, we take the smaller of the amount that would have expired and the opening balance. Okay, that's the key. And then we do that again because we now have an opening balance. And now nothing expires. This is the big deal. Nothing expires here. Okay, because we've already taken it before. We've already, in this period, we've already taken 200 earlier. And that's what this opening balance shows. And so now we put this in, and then that means that our closing balance now is how much we took originally and how much we added to it and how much we've kind of lost. That's the thing we keep track of in the balance. And then we're finally at this thing, and we say, okay, what's the opening balance minus the amount we've already taken? Let me switch the scenario. Let's put this first scenario up here. This is the first scenario I started talking about. So now what happened here is we've taken 80 and we put 80 in the account, and then we're about to lose 200, which is the very first thing we put in. Okay, and then we would have wanted to take 20 more, but we take how much was in the opening balance. This thing just accumulates. That's why we have no circular reference. We take this amount, and that's it. That's the opening balance, and then we say, okay, how much do you actually is actually expired? Well, it's the amount that we would have taken minus the amount that's reduced because we had some earlier amount we've taken. That captures the vintage and everything else. And this is a useless one, and this is the one we finally apply. Well, I just did that obviously a few minutes ago. So here's kind of what you'd have to do when you put this NOL into your model. What you do is you just add a line for this NOL expired. And then I'm sorry, I can never remember this crap. Maybe there's a better way. I know somebody from what's this model off. This thing give me the willies thinking about people trying to have some competition in modeling. Oh my God. It's like the 5-star shit. Oh God. Ugh. I'm a 5-star modeler. Ugh. Now you put the NOL here and so what I would do is just copy these accounts and keep this stupid little sheet open, and then try to remember this minimum function and all that. And what I'm going to do is also because taxes affect CFADS, and if you have a project finance, this affects your project finance. Ugh, shoot. So I'm going to put this in my little UDF. Okay, because I'm trying to put all the possible complications in the UDF. And I'm going to now try, as I might, to stop recording.